There are no shortcuts to building wealth today. It takes time, effort, sacrifice, and diversification. But today, diversification means something different than it did in the past. You deserve a more secure way to protect and grow your wealth. At Delta Harbour, we take this to heart. Our mission is to help by inviting you to add physical gold and silver to your wealth strategy. Book a free consultation today and let us show you how to protect and grow your wealth through the ownership of physical gold and silver. Let us show you the Delta difference. Hey everybody, welcome once again to Hard Money. Darren Long is here. John Scholes, welcome to the show. It is the perfect storm for hard assets edition of the show. You want to reach out anytime to Darren and the crew. Do so. There is a chance you don't have any physical hard assets in your investment portfolio yet. Time you got some. How about that? Physical gold and silver and some other metals as well. If you're not too educated on it, you don't know how it works, this show is weekly for your education and to your due diligence to get some of those hard assets in your portfolio. Really simple. 1-888-335-8645. Call Darren. He'll sit down, have a coffee with you, relax, educate you on how to begin that part of your investment, and go to deltaharbor.com. Harbor with a U. This investment always is about you. deltaharbor.com. And then youtube.com/Delta Harbor. They have their own page. Videos of this nature and all kinds of good stuff there. You can spend some time in their YouTube channel. And again, educate yourself before you dip your toe in and get some gold and silver physical metals into your portfolio. But a crazy week with the economy once again, Darren, and right in the middle of it all, an amazing buying opportunity is staring you right in the face. Some gold, some silver. How was the week at Delta, brother?
Well, yes, on all those fronts, John, for sure. This is true of both gold and silver. Gold had moved up to almost about 1840 almost 2 weeks ago, while silver jumped by 26 before they were both brought back down. I guess gold, when it was all said and done, dropped to the high 1600s, and silver fell momentarily to as low as $22 an ounce. Right now, as we tape the show, gold has made an impressive bound back up to 1775, and silver is currently back up again. Also, very impressive jump today to around 2375. So first thing we'll do is say congrats to anyone at Delta Harbour who rode this wave and enjoyed it by adding some physical hard assets to their portfolio. Well done. It's certainly something that we'd like to give hats off to, because you don't get that opportunity too often. And when you do, these windows are very short, and they're very sweet windows, John. I mean, taking advantage of something like this is like throwing it back in the face of those who would otherwise not like to see gold and silver get so high in value. And we're lucky to have these people come aboard. So this has been a very busy week for us, and one which we're still in the midst of as we tape here on Friday.
Lots of stuff to get through. The U.S. received their inflation data, and it seems to be looking less and less likely that this is transitory. What do you think about that?
Well, I think you're right, 100%. Interpretations of Wednesday's consumer price index data, which in recent months has become an eagerly anticipated about as much as the jobs report is on a weekly basis, are a reminder of why I think most economists right now are likely to agree on a single conclusion, John, and that is that it suggests that the heightened inflation watch is far from over. We are in the thick of this, and it is going to continue on. Certainly, there are some arguments for both sides of the fence still, and I suspect we're going to hear more from those economists who believe this is transitory, but I think we are starting to see data that proves beyond any reasonable doubt that this is not, in fact, going to be a short-term inflation situation. In the U.S., the headline inflation rate remains, with the data at 5.4%, basically unchanged at a 13-year high, and the core is at 4.3%, which is down from 4.5%. Within the overall numbers, there were notable, and I would say far from uniform moves in some of the individual components, which we'll be addressing throughout the show. And again, reasons why you own gold and silver and other hard assets, particularly sensitive ones that we discussed over the last few weeks: food, and gas, which burns a hole in our pocket as we now travel and get out of COVID, or are we? We'll talk about that on the show a bit as well. Both showed gains. Others, such as restaurants, healthcare, from your highlighting the initial stages of what we would consider the possibility anyways, of wage push inflation, where pipeline pressure is notable and continues to build.
What about the producer price index, or PPI as it's referred to? Obviously, that little report on Thursday, not what they expected in the US either, right?
It wasn't. U.S. wholesale prices rose sharply in July, which is the 6th month of straight rises in a row, and it offered little evidence that a big wave of inflation is on the verge of cresting anytime soon. As we said, I think that this is more than just transitory, especially in the U.S. right now. The producer price index jumped 1 full percent last month again, which may, to most viewers or listeners, may not seem like a lot, but this is huge. It's an enormous jump. It's a very significant number. The government said Thursday themselves that it is a very, very big number, and they're watching very carefully to make sure that they're keeping their proverbial finger on the pulse, so to speak. An economist polled by the Wall Street Journal had actually forecast a 0.6% advance. So this is a significantly higher number. Most of the increase was concentrated in services such as passenger fares for trains, planes, and other types of transportation services, hotel rooms amid what has become now a midsummer surge in travel. Wholesale auto prices have also risen sharply, the numbers showed, and there is strong demand. Car makers are not being able to produce enough vehicles, especially not get them from overseas if they're not domestic vehicles. So they can't keep up with that pace, and that's a concern. The pace of wholesale inflation over the past 12 months moved up to 7.8% from 7.3%, and that's the highest level since the index was reconfigured in 2010. And you understand, we talk about headlines being misleading all the time, John, but ultimately you have to respect the fact that what's behind the headlines is often more important. And John, you've been with me long enough to know that the reality is, and it's a sad reality, but the way we measure data, the way we talk about inflation, the way we talk about producer price index and other things like that changes based on what the needs of the government are. And we did that, reconfigured it back in 2010. It is one of the highest readings, no matter how we've registered PPI, since the 1980s, John. So this is definitely something different. This is not the same as we've seen before.
Reaching out in contact, by the way, anytime for Darren and his team, 1-888-335-8645, deltaharbor.com to reach out online as well. I know you snuck in that phrase wage push in there, Darren. Elaborate on that. What does that mean?
Well, wage push inflation, John, is an overall rise in the cost of goods that results from a rise in wages. And we're not certain that that's there yet, because a lot of back and forth between employers and employees. But to maintain profits in a business, and after increase in wages happens, employers have to increase the prices they charge for their goods and services they provide. And this is more likely to occur if prices remain high, which they have. And we'll talk more about wage push and employment and job vacancies in the second segment. But if you're thinking about buying gold and silver, I'm telling you right now, now is the time to do it before the storm hits. We're going to be talking about the perfect storm for precious metals today, but it is time to diversify. Take it home with you, store it in your own account through Delta Harbour Assets, put it into your TFSA or RSP or any other type of registered account. It is extremely easy to do this, and it may just mean you have protection against this possible problem with paper down the road, John. And ultimately, that's what we want. We want our listeners, the viewers to our podcast, we want them to be the haves. You know, we want them to be maintaining their wealth and growing their wealth. And we want them to use gold and silver to do it, because history has repeated itself time and time again. And we're here at yet another moment, John, in which history is about to repeat itself as we get ready for significantly higher gold and silver prices. We only want physical bars and coins. And when you come to Delta, we can offer you a hand to help you walk through this whole entire process and make it extremely easy for you, no matter whether you're a small investor, large investor, whether you've got tens of millions of dollars to spend.
Good opening salvo there, brother. We'll take a short break, get more here. We're going to talk more about the wage push and unemployment and employment for that matter. If you want to reach out during the break or any other time, 1-888-335-8645 is the number anytime. And deltaharbor.com. Harbor with you. This investment, these precious metals in your portfolio are always about you. We'll do that after a short break. This is Hard Money on Sauga 960. All right, welcome back to Hard Money. Darren Long here once again. He's giving you the knowledge and pulling back the curtain on what could be a very, very significant part of your investment portfolio. If you've not ventured into dip your toe in the waters of hard assets and precious metals, this would be the time. We spend every hour on the show every week educating about that. A little later in the show, we'll give you more details on how you physically get going on opening up that part of investment for your portfolio, gold and silver in the physical form. That is on the way. Call anytime, 1-888-335-8645 and deltaharbor.com, Delta Harbor with you. So let's elaborate a little more, Darren, what you mean about wage push. We got into it at the end of the first segment, so we ran out of time, so I want to go back to it. And more about employment and the flip side of unemployment, right?
Well, sure, John. I mean, it's a topic that's near and dear to us because we pay close attention to this data, and it certainly relates to gold and silver. I'm not sure how our listeners feel. I'm assuming they feel the exact same way as we do at Delta, that we want our listeners and ourselves to be part of the haves and not to be too focused on the have-nots. We want to develop our wealth, have a plan in place, and make sure that we go through this entire process with our eyes wide open to what the world is really telling us, what's really happening out there. And owning gold and silver since 2005 has really allowed us to have better balanced wealth, which is very diversified, and it's contrarian. It's not something that everybody else is doing, so we're not jumping on some bandwagon that's at its near top. And right now, both in the U.S. and Canada, we're unsure of what the post-COVID world is going to look like. In fact, John, you mentioned employment. There is higher than average unemployment in both Canada and the U.S., and many economists will tell you bluntly that they're uncertain whether inflation will cause lasting structural change in the cost of everything we consume, from food to clothing to material items to everyday services. It doesn't matter what you're looking at. Inflation will touch them all if it gets too far ahead of itself. And despite all of it, we find ourselves still right now with all this great positive talk, all of this fantastic stock market fodder, and all of this rhetoric about how great things look and post-COVID spending, consumerism, and all that. We still have abnormally high unemployment and higher than normal job vacancies. And on one side, what we're seeing is that employers are talking about how it's near impossible to staff adequately, certainly in some service sectors, in some manufacturing sectors, and some of both. Well, on the other side of this coin, John, we're seeing that employees are saying, look, I can't come back to work because we need to be compensated more. We need to be getting better pay. And this is a huge problem right now that is existing in Ontario, and we're living through it. If you've got a son or a daughter, they might go out and look for a job, and these are minimum wage jobs, yet the items they're selling or helping to produce, or the services they're participating in, could be astronomically high in comparison to what they were a year or two ago, but they're still only being offered minimum wage. So there's a discrepancy here, John, and it's being misunderstood through the data. And as we talked about in last week's show, this is the distortion of how data gets across through our economy.
And why go to work when you don't get a minimum wage when you get more from the government for sitting at home while this pandemic is still here? Just
right.
you don't want to go out and do it. Why would you? It's really a misleading situation because the data obviously skews the truth, and does not lead to like serious concern about whether or not we are really truly seeing a boom or bust in the near term. What do you think about it?
It does for me. It absolutely. I mean, I can't comfortably say I'm on either one of those. Suffice it to say, I'm leaning more towards a bust. And that may be very contrarian to what the average economist is looking at in terms of numbers, but I'm looking way beyond the headlines and way beyond the initial data. I mean, you can't just take somebody's word for it and say, hey, it's great. When people buy gold and silver, we often have a chuckle because they do more due diligence than they've ever done in any dollar they've ever invested before they buy gold and silver for the first time. And that's to be encouraged. I wish it was that way for all the money that they spent, because then all of their hard-earned dollars would be coming over to gold and silver once they realize how foolishly in some cases we have all made the mistake of spending based on this distorted data. We see the data, we think it's accurate, we make decisions based on it, and then we end up being hurt first, And so if you've bought anything lately, you know what's happening to prices. Essentially, the official inflation rate in Canada is 3.1%, and that's very charming, let's say. I mean, after all, when houses went up 30%, food steadily climbs, the price at the pumps are up some 30% year over year. It more than offset declines in recently declines in plywood, in labradoodles, for God's sakes, because that's really what people are concerned about. How am I going to afford that new deck, or how am I going to afford that new piece of wood, or the bloody labradoodle that I want to put in the house with the kids because I got nothing better to do. I'm sitting here at home with COVID and we're not traveling anywhere. Let's get a labradoodle dog. So those kinds of things really don't give us a good indication that inflation is all of a sudden just coming off the board because a labradoodle is $500 less than it was a month ago. You know what I mean? This is ultimately something that we have to keep very close to, watch the data and see what it tells us.
So what's led to this price pop?
Well, cheap interest rates, I mean, for sure. Oh. Plus the reduced costs of work from home, as you said earlier, and the $87.1 billion that Trudeau libs have paid out in income support subsidies directly to families. Spending was down for 16 months. And personal savings, like consumer spending, didn't exist for 16 months. Personal savings got amped up because of it, and now there's a torrent of consumerism that's being unleashed as COVID starts to slowly fade. Again, we may have COVID part 4, but ultimately, this is what we're seeing happen, and it's put us in a precarious position. We're making decisions based on this data, as we suggested last week, John, in our show called Unintended Consequences, which people can go and look at on YouTube if they wish to. And those decisions are short term. They're not going to come to full fruition until next year or 2023. And for now, the feds just keep spending to basically pave over all of our problems.
So the federal government spending is going to continue, in your opinion?
It will. Yeah, absolutely. I think that the spigot for federal cash is not going to be turned off anytime soon. I mean, just look, Miss Freeland, our non-financial finance minister, announced just a week and a bit ago that wage and rent subsidies for businesses are going to remain for at least another month. I mean, that means $300 more a week, now ongoing for 55, 56 weeks for those wishing to stay at home for personal reasons. I mean, the cost will be an extra $3.3 billion, I think the number was. And the direct deposits will continue through the coming election campaign, which is about to happen. I mean, cynical politics, or is this compassionate social spending? I don't know. And what about the thousands of small businesses who cannot staff up because it's a better deal, as you said, John, for employees to work from home? Nothing's normal yet. The central bank is still spending billions a week buying up bonds to control the debt market. Interest rates are still in the ditch. Nobody at any level of government has lifted a single finger whatsoever to address the housing insanity. And the feds refuse to rein in emergency spending that's pushed out debt through the $1 trillion mark, and nobody cares. If it's up to me, John, right now, I'm saying it's time to diversify. It's time to take your wealth and to add the insurance of gold, physical and physical silver. And I say that by looking into the eyes of our viewers on our podcast and talking to the listeners on this show. Take it home with you. Take the gold home with you. Store it in your own account through Delta. Put it into your TFSA or RSP. Gold is cheap. Silver is very cheap, but it's easy to do, and it's something that you can have to increase the protection against the possible problem with paper down the road.
Yeah, if you haven't got in this investment yet, if you've caught the show a few times, you're still thinking about, jumping to the other side, do so. At least have a chat with Darren and his crew, 1-888-335-8645. Delta Harbour, Harbour with you, deltaharbor.com, and youtube.com/Delta Harbour as well. They have their YouTube channel. You can catch these video casts and tons of other information, education on that page as well. We'll take a short break. Lots more to go, and we're going to tell you how to very shortly get that portfolio started with precious metals in the form of gold and silver as part of your investment strategy. That's coming up in just a bit. This is Hard Money right here, Sauga 960. Welcome back, Hard Money. Good you stuck around. There's more to tell you and more to teach you about precious metals. This may be a part of your portfolio you have not cracked open yet in the physical form. We're talking gold and silver, physical precious metals you can hold, you can see, you can have, you can keep, you can store. It's a good thing if you've never done it before. And this is the place to start with Delta Harbour. Darren and his team are there, 1-888-335-8645. Before you dive in there, it's all about education, which is part of the reason why we do this show. deltaharbor.com online as well. So we're talking about the perfect storm for precious metals such as gold and silver, Darren. And along with this, of course, goes the debate about what happens if another wave of COVID hits us hard. We're in the fourth. It's a lot more tempered than it is here in the US, but we're not that insane. We actually vaccine up here. But having said that, what do you think? What's your outlook in that regard?
Well, here we are, John, taping on a Friday, and the numbers again show that we've hit 2 days back to back of over 500 new cases, of which 75% of the numbers are telling us they're unvaccinated folks. Whether it's dramatic or not, whether that's leading to a real serious fourth wave where we have to experience what we did in the other various waves of shutdown and things of that nature, I'm not sure yet. But I mean, again, we know that those numbers are out there, they're floating around, and it is a very solid point, John. I mean, you can't belittle this point. It's a very important one. You have to acknowledge that this is kind of like the elephant in the room. And if people don't realize that our financial system is already severely distorted, and I mean severely distorted, and it's already paved over with unreliable data, and all of a sudden we have a fourth wave of COVID, and it hits us right in the gut and skews the economy even further into uncertain territory. We're going to be very concerned about this. This is something we're watching. This is something that is probably going to be a significant part of our decision process. If we can't get reliable data, how can we continue to make reliable decisions? We talked about on last week's show that is the outcome, which ends up being the unintended consequences from trying to do good. You know, you try to put that money into the system, keep it liquid, keep businesses afloat, keep people in their jobs. But unfortunately, because things end up looking so good, we end up spending money and making decisions financially that we wouldn't otherwise have made because we weren't allowed to fail. You know, everything that was potentially going to shrink, and jobs that could have been lost or businesses that could have been closed because of COVID, they end up being saved through subsidy programs. And great, I'm happy that they are. I'm great we live in a country that cares enough to do it, and that people that care enough to keep those small businesses up and running is a fantastic thing. But we're making decisions about our wealth moving forward based on those same things, and that means we're making it on distorted numbers. If we see COVID numbers jump substantially, it does several things. It changes the dynamic of the spending due to social concerns related to COVID, and thereby it also changes the dynamics of inflation as spending habits get curtailed. So in the first three waves, we know that spending slowed down significantly. So it can mean the federal government extends the subsidies further, which is a possibility. It can be another slowdown, which again, let's face it, whenever we hear the term COVID or phase 3, phase 4, 2, 1, these are rally killers. This is momentum killers. And if we were thinking this is post-COVID, we're getting out spending, consumerism was increasing, trying to get back to some level of norm, and then another COVID phase hits, it's a rally killer, which puts pressure on those who made bets that the economy would surge post-COVID. It slows work from home transitions back into businesses. It slows business into reintegration. And it stands to reason that every individual wealth plan should have additional assets to combat these threats.
Well, we've been plugging this since we started and do every show is okay. Now I've moved along a little side in my portfolio. I've squeaked out some room for some physical assets. How do we get that gold and silver into the portfolio? Physical assets, by the way, not paper.
Absolutely. So number one, don't be afraid of physical assets, bars, coins, or otherwise. Don't be afraid of having to store it. Don't be afraid of having to transport it. All of that is handled by Delta. Buying and selling happens by phone call. And if it is at home, all you have to do is bring it back in. We cut you a check and you go home a happy client. You can buy it and take it home, John. That's an easy thing to do, and people can do it, and they do it all the time. If you'd like to have your own storage account in your name with your product, serial numbers, everything that you would expect from a top tier storage option, then you can do that also through Delta Harbour Assets. We have a storage account that you can utilize. You can take existing bullion that you have at home, or even if you're stored somewhere else and they don't allow you to see it, or you're not allowed to make decisions by phone calls, or you can't buy and add to it like you can through Delta, you can move it from there. If you have it with any other storage facility anywhere in North America or the world, you can always move to Delta. We have storage options all over the world. Or you can obviously store right here at home in Toronto. That's easy to do. You can put it into registered accounts, John, TFSAs, RSPs, LIRAs, RIFs, LIFs. If you have existing RSPs or spousal RSPs, think about taking your dead horses out of those registered accounts and adding gold and silver. Like you said a few minutes ago, something gets squeaked out. We change the bad for the good. We take out the old bath water and replace it with the new bath water, and those are options with Delta. And further to that, you can also have what we call bulk bullion, which is for people who don't or aren't concerned with taking bullion home or storing it. They just want exposure to bullion, and they want it to be vaulted, and they want it to be physical, and they want serial numbers, but they don't really care if it's in their name or not. They just want exposure to it. They have that option. And also, lastly, John, financing. You can finance up to 80% of your purchase with Delta Harbour in your purchase of gold or silver. And we'll show you how to do it, walk you through it each and every step of the way. And it's very easy to do.
You mentioned that, and before, collateral financing. Dip into that a little bit. How does that work?
Well, collateral financing, basically the bottom line for that is that if you're looking to get more bang for your buck, collateral financing is a good option for you. If you want to get, let's say, typically 100 ounces of silver, it's going to cost you roundabout in Canadian dollars, somewhere around $3,800 Canadian. I could do that, and that would be an easy way to secure it, and I could take it home with you. Ultimately, that's an option you can have. Now, if you want to, you can also store that 100-ounce bar with Delta Harbour Assets. And if you want to take it a step further, like you were suggesting, John, collateral financing. I can take that 100-ounce bar and I can turn it into 300 ounces. Now, if you're the kind of client that can afford that and you have the money to otherwise buy 300 ounces, maybe you only want to spend 100 ounces and keep some of your powder dry. That's an option. That's what collateral financing is for, specifically for you to keep some of your powder dry while still putting your dollars to work in the silver or gold market and watching them rise in value, having risked somebody else's money and not yours. That's the true value of collateral financing.
It's a good thing. Getting someone else's money to work for you is always the best way to do it, for sure. Again, we're talking physical assets here, gold and silver. That stuff, it's heavy. You can hold it in your hands, and as Darren said, keep it at home if you wish, or you can store it and just know it's yours. You can audit it anytime you like. You can visit it. You can buy it and sell it on a phone call. It's really cool if you've never done it. So at least make that phone call and have a chat before you commit. Really simple. 1-888-335-8645 is the number. DeltaHarbor.com. Harbor with you. This investment always about you. And again, you can watch these video casts and more education to be had on youtube.com/Delta Harbour. Go to their YouTube channel and carry on from there. Lots more on the way, but we got to take a short break, a wee break here. We'll get back to it. More Hard Money is on the way on Sauga 960. All right, welcome back. Hard Money right here. Darren Long is in the chair, steering things properly for you. Rob, Roy, and the rest of the team are standing by as well to educate you, get you started in that part of your portfolio, which may be collecting cobwebs. That would be physical assets in the form of gold and silver. Just reach out, have a chat. Don't commit at first. Just learn about it. 1-888-335-8645 and deltaharbor.com. That will pique your interest for sure. We talked a lot about on the show so far, Darren, about the problem with what the government's doing with handouts. It's easy to sit back in your laurels and collect money. And, if you're a lower earning income, there's no incentive to get out there and fix things and stimulate your own personal wealth. Well, I mean, can we fix this? Can it be fixed? Can we vote a government in that would be better at managing this, even though it's generally 4 years? Most of them don't want to get their hands dirty. And then after that, what happens next if nobody does anything?
Those are all good points, John. Can we fix this? We could, but the population likes handouts. They feel good. They feel right. They feel effortless, which is the big problem. So, we're going to see another election, and you can bet your bottom dollar that it's more than likely, it'll probably be called this weekend. As we're taping this show, you're listening to it on Saturday, Sunday, maybe Monday evening. This is probably the weekend that Trudeau calls another election. And by the time you've listened to this, we'll know the dates, and it's probably going to be late September. And they'll want to do it before a fourth wave takes hold because they don't want to get involved in that. And unless polls lie, Trudeau takes it. I mean, that's the bottom line. That's where we're at. And what we should think about is this. If during this whole COVID situation, under Trudeau's tenure and under what lies next, and how can we fix all this besides just adding gold and silver to protect ourselves and have insurance, think about this. 2 years ago, the average property price in the GTA was $792,000. Here we are in August of 2021, 2 years later, and it's now 1.108 million. It's a 40% increase. And ask yourself one question. As a listener, as a viewer of this podcast, do you earn 40% more than in 2019? Does anyone? Yeah. Of course, we know the answer to that. It's no. And since the election, we had a global pandemic. Of course, we know this. We've been through it. We've lived it. This is potentially the fourth wave we're about to hit. The federal deficit in our country, in Canada, the country that we all love, went from 19 billion to 354 billion. The difference of 1 year. There are 340,000 fewer jobs than 2 years ago, and households are in substantially more debt than they were. Every economist is forecasting interest rates are going to go higher over the next 2 years. And it's a sure thing, a sure bet as there ever was, that Miss Freeland is going to take personal taxation through the roof come spring of 2022 in the next budget. And this is going to happen unless our good friend Aaron O'Toole finds TikTok and learns to moonwalk. Ultimately, there is no way we're going to get around this. This is going to continue to occur. Federal spending is going to continue to happen. Bailouts are going to continue to happen for every province. Every single person that puts their hand out is going to get a little something. And this is how we buy votes. This is how we say we're too big to fail. This is how we create a system which is distorted, in which we're making decisions which are not good decisions, John. We have to have diversity in our wealth plan. We have to have some gold and silver.
Again, 1-888-335-8645 is the number to get rolling, deltaharbor.com. So there's no quick fix, and it's more or less the same thing. Now, any speed bumps are met with printing presses, and we push the envelope further. You've talked about this so many times. I can think of no better time to make and add some additional insurance, as you call it, to your portfolio in the forms of gold and silver. How about now? How about doing it right now?
Yeah, I agree. I'm totally on side with that. I think it's the right thing to do. We have two very undervalued assets, one a lot more so than the other, in silver versus gold. They're both readily available. There is no delay in orders, and you can come and buy some and get it, put it in your portfolio, store it, take it home with you. Doesn't matter what you want to do in your registered accounts. But when you look at the overall situation, it's a huge concern. I mean, because this distorted data has led us down a path that I think we're going to regret. I know we're going to regret. The mortgage debt has ballooned right along with real estate and prices, because people are stretching very badly. Their wealth is being stretched to the nth degree. The proportion of high ratio mortgages, which are those loan to income ratios of 450% or more, has ballooned also, which means people are taking on way too much debt. We reported, I guess, maybe about a month ago, an article from TD saying that basically 60 cents out of every dollar we earn is going towards some type of housing related cost. Wow. So huge concern. And it's also interesting that households with a major income earner younger than 35 are doing about 37% of the borrowing, which is up from 28% last year. And if you look at it across the board, what it means for me essentially is that fear of missing out, this FOMO we talk about all the time, it's struck hard and deep, John. It also is very scary for lenders because insured mortgages from the CMCH have shrunk from 50% of total mortgages down to 35% now. Because, of course, the CMHC, imposes $1 million cap. And listen, $1 million ain't what it used to be. Yeah. Bankers know mortgages will cost more in 2, 4, 5 years. They realize as the pandemic ends, consumer spending is going to increase. Debt service ratios are going to worsen. Our economic system is largely based on housing and real estate. We know this. So we have to look ahead and say, how do we develop a wealth plan that's going to support our habits, our spending habits? How do we support our retirement needs? How do we gain traction in this environment of uncertainty moving forward? Well, look at it. 6% of our GDP comes from real estate transactions alone. So we know it's housing. It's a housing market, a housing GDP, a housing economy. And so we have to do and make decisions when we see these perfect storm opportunities for precious metals and other hard assets and get ourselves into these types of assets. Mortgage rates and consumer spending, they're not predictable. We don't know what's down the pipe, but we know that consumer spending could go much higher if COVID was to end tomorrow. But we also know that mortgage rates could pop up very quickly at the same time. And so we know that there's going to be a portion of foreclosures with those high debt loan ratios of people buying, homes that are 450% or higher on average of their income. And, meanwhile, most pandemic borrowers take out these monster mortgages, have opted for 5-year terms, which I think is smart. And, we're going to have a real big wall, a wave in 2023. A full 20% are going to come up for renewal. And TD knows, they say about 17% of that entire bit of renewal is going to be in trouble. And of course, nobody is fussed to buy any of this because of how Ottawa spends. They spend us out of the problems, as does the US Federal Reserve. So many projects, so many bailouts, not even a faintest of hints as to when revenues will match spending because it's not important. We've lost focus, we've lost sight of that. They don't care about debt. Why should we? So having something to balance your paper investments is always smart and less common, but it's very necessary, John. We got to have gold and silver. I believe it should be part of every single individual's wealth strategy, have the finest of all assets within a category. Gold and silver are among the most liquid and easily storable assets on the face of this planet, and we can make it easy for you as an investor to hold them and make wealth, generate wealth during this uncertain time ahead of us when you do own assets like gold and silver.
Now we're going to drill down on exactly how to do that with Darren and his team after we take one final break here, get to more of the show. You want to give them a call, again, have a chat and educate even more and further beyond what you get on the show every week. 1-888-335-8645, deltaharbor.com, Harbor with a U, and youtube.com/Delta Harbor for their YouTube channel as well. We'll continue. More to go. Hard Money coming up on Sauga 960. Welcome back. Hard Money. Few minutes to go. Darren, let's get into it. The number is 1-888-335-8645, deltaharbor.com. That's Delta Harbor with a U. This investment always is about you, deltaharbor.com. And these video casts, these shows are posted on their own YouTube channel as well, youtube.com/Delta Harbor. You can find all these, review and watch them back at your leisure. And Darren, you're always talking about getting these hard assets into your portfolio. We're not talking taking a financial hatchet to 90% of what you already have and replacing it all with precious metals, but it should be a substantial holding, a hedge for what's ahead. And, you always talk about, you got to see it on the horizon, what's coming down the pike, and you want to get these hard assets into your portfolio and give yourself a little satisfaction, a little bit of a safety net, a little bit of a cushion moving forward for the future, right?
We do. And I think it's very important, John, to acknowledge that and to also point out something that's incredibly important. You mentioned that you don't want to take a hatchet to your existing portfolio. It's so true. I listen to lots of people talk about precious metals. And a lot of people talk about it as the end all and be all. And unfortunately, this is just not the case. There's no room for just one asset in a portfolio unless you are a very, very aggressive, advanced investor who is extremely successful. The average person needs balance, diversity, and that can be had by owning forms of paper investments like our traditional stocks, bonds, cash, and things of that nature, but also by adding some physical assets as well. So remember, when you own a mining company or mining shares, you do not own gold or silver, physical or otherwise. If you buy a platinum producing company, you do not own platinum. You own the company that's producing that product. They own the product, and what they do with it is up to them. You never get the full advantage of owning that hard asset. With gold and silver, you're getting something that we know central banks around the world buy and own. They have it to protect themselves. They have it to protect their paper assets. And how much of it they have depends on where in the world you go. But ultimately, we have seen a lot of regions of the world over the last 10, 15 years start to become buyers of gold and add it to their own portfolios, because strategically it's been something that's been around for thousands of years. It's stood the test of time. It should be part of a person's portfolio for that reason alone. But let's go a step further. As we said earlier in the show, this show is about a number of different problems that we're facing right now that bring us to this perfect storm situation. So when we look at this, we think about inflation that's coming down the pipe. We think about high unemployment and job vacancies and no wage increases, right? There's still an imbalance there, John. We don't know what the post-COVID world's going to look like. Are prices for these things going to stay high? Or will we see some counterbalance and a lot of that will come down? I think that you're going to see a lot of these prices stay high, because I think this is a new world. And why on earth would any producer of a product, unless he's forced to, in these very distorted times when governments are giving handouts left and right, have any incentive to bring down their prices or to be more competitive? Why? I hear it all the time. When I talk to manufacturers and other people in the industry, they are in no rush whatsoever to increase the amount of competition by lowering their prices. They want to increase their prices. And right now they feel that this is a once in a lifetime opportunity to do that, because us as a consumer are willing to pay the price. Case in point, I spent a few days with my family up north this week, and we went into the village of Blue Mountain. For those of you that like to travel up north, I'd like to give this as an example of a fine spot to go. It's not for everyone, but my family does enjoy it. And while there, we want to consume everything that the Blue Mountain has to offer. There's a lot of eco-friendly tourism that happens up there, and a lot of different events and things that you can take part in, even though we have COVID restrictions and that in place. Well, you would not believe, and this is the unfortunate side of where we are post-COVID, the prices. Unfortunately, they are having to make up for lost time, and they are having to put themselves in a position to take full advantage of consumers. And in doing that, pretty much everything across the board is twice what you would normally pay. Your food, your all of your excursions, if you're going on the great slide rides up there, or the ridge runners and all that stuff, expect to pay a whole lot more. You're going mini golfing for the day, expect to pay a whole lot more than what you normally were used to paying. You want to get a room for a few nights, a whole lot more than what you're normally going to end up paying. So this is part of this perfect storm, John, and understanding that these are not just telltale signs of inflation per se, but these are in fact telltale signs of an economy that is uncertain where it's heading. Then you can make good decisions. That's part of the due diligence that we offer at Delta. And when you look at it and put it all together with inflation, high unemployment, job vacancies, no wage increases, we're looking at another possible COVID wave, an election around the corner, as we spoke about earlier today. You have to wrap all this up with one thing that you should research the heck out of and know more about, and that's hard assets. And in particular, gold and silver are world-class tier one assets. And if you don't have them in your portfolio, this is a great time to think about adding them physically, bars and coins, to your portfolio. They are liquid, easily transportable, and very, very much part of the fold as far as wealth is concerned going forward. These are assets which I believe will perform extremely well.
Well, I think, Darren, you talk about every week due diligence being a huge part of this, and you've never said, get online to deltaharbor.com, fund your account, just go nuts. I mean, no, take a step back, pull the reins back, educate first, make sure this is the investment for you. And once the cloud's clear and you got some clarity on the situation with you and the rest of your staff, then you'll want to go forth and get into some of these physical assets as far as gold and silver are concerned in the physical form. It's heavy. You can hold it. It's beautiful to look at. That's what they're talking about. So in that regard, some options for people to hold gold and silver as we get down to the last few minutes of the show, because when it gets down to brass tacks, or gold tax in this case, how exactly do we do it?
Well, it's pretty straightforward, John. Direct delivery to home. You want to buy 10 ounces of gold and have it delivered right to your home as part of your wealth strategy. No problem. Set up an account through us directly through the phone number or online, and fund your account. And then we make the purchase and send it directly home to you. You'll receive it, put it away, safe storage. And then when you're ready to sell, you'll bring it back to us and we will gladly cut you a check for it, buy it back. and then you've made your profit go that way. A second option for you would be to put it into storage. And that's simply having your own storage account in your name under our tutelage, under our watch. And you can make buying and selling decisions by phone, keep your product very liquid. You can add and subtract product and add other types of products to it. Maybe you want to have some gold, silver, platinum, and palladium, or just maybe some gold and silver. And you can do that in your storage account. And it's very affordable. It's not expensive. It is easy to do, and we can get that set up for you. You can also put it in a registered account. It'll be stored. You can have access to it. You get your serial numbers. It is physical, tangible, hold in your hands wealth, but you can put it inside an RSP or a TFSA. Take advantage of those tax incentives and those umbrellas under the RSPs and TFSAs, or use your existing liras or any type of registered account, bring them over from another institution to us, and we'll set you up with some gold and silver, or part of it can be put into gold and silver, and go from there. Lastly, as we discussed earlier in the show, you have the option to use collateral financing with bulk bullion. If you don't care about whether or not you hold the product at home and you just want to put it into storage and you just want to make sure that you maintain exposure to gold and silver, maybe you also want to finance it. We can help you do that. You can use collateral financing, finance up to 80% of your purchase, hold back some powder for a rainy day, cost average, do a number of all those things, and we can get the ball rolling here at Delta. It is a white glove service. We absolutely 100% want to make sure that you have everything that you need to be successful. We will hold your hand every single step of the way, but get some gold and silver. It's cheap. It's affordable. Silver right now is on sale, and I think that you'll be very pleased at when you look at the prices down the road and what you've got in return once you own these quality hard assets.
And we are done for another show. Absolute pleasure having you join us for the past hour. You want to reach out now, as Darren said, do so, educate, learn, and get started. 1-888-335-8645. The number, deltaharbor.com, harbor with the U. And finally, you want to watch this video cast and much more, to go to youtube.com/Delta Harbor as well. We'll catch you next time. Hard money right here, Sauga 960.